Yeah, hi, I'm back, Kaushik Chatterjee. And in this video, what we are going to discuss, we are going to discuss about three types of insurance, right? So most of the people, earlier video I have already said, like, what exactly insurance, the briefing about insurance, already we have given, already we have discussed. So in this video, I'm just going to discuss like what exactly, what type of insurance are there, what exactly each type of insurance is going to help out me, and what exactly it is going to be needed even as per my life, right? So when I'm talking about life insurance, definitely it is only useful and it is only a tool, a protection tool, already I have discussed. So it is only going to protect my life, right? Now there are three types of life insurance. The first one comes for term insurance, TERM, term insurance. The second one comes for endowment insurance, or popularly it is known as a traditional insurance, traditional plan insurance. And the third one normally it is called ULIP, unit link insurance plan. Now let me tell you first the definition of all three types of this insurance. When I'm talking about term insurance, what is term insurance? Term insurance, it is all about the protection only for my death, a pure term insurance. Now most of the people will be thinking like, insurance normally known only as a tool, like, when you will get die, and that time only the, let's say, the nominee and let's say the family, if I look out, the fundamental of insurance, if I look out, the people will receive the money. Most of the people have the mindset, and that is the reason, like, most of the people will feel, no, this is not even a tool even I require itself. As I told you, this is not a investment, this is not a saving, this is a protection tool. So it is up to you, like how you want to protect yourself, how you want to protect even your family. So that is definitely up to you. But think one way, like, today, let's say, whenever I born, let's say, if I give a line of your life or everybody's life, we are born, let's say, on a certain day, right? Or whether it is 20, 30, 40, 50, whatever years we are living today. So you have a life, let's say, till the day I born, even till today, if I look out, the line if I draw, it will not be a straight line. Why it is not a straight line? Because as you know, straight line denotes, it's just as per the ECG machine, it's a dead line. So we are not a dead person, we are all alive. If I'm talking, definitely I'm an alive person. But if I look out again, the incident, what has happened, even let's say whatever my current age, if I look out previous, so let's say if I imagine today I'm 30, or let's say today I'm 40, or let's say today I'm 50, whatever age I am today, you know your age, you know when your date of birth, right? The only thing is I don't know even what is going to happen to the next moment when I'm going to die, and that is nobody knows. You should not know also, and for that on this protection is required. Now this 30 years again, if I look out, this 40 years again, if I look out, the 50 years again, if I look out on the previous whatever I have spent so far in my life, so the line will not be a straight line. It will be just like a sinusoidal line, upside and the downside. Ideally, typically, nobody can say if your life is a like, straight line. So ideally, it's the person is already a dead person. So we are not talking about that. We are talking about the life, a eventful life, which all we have passed so far, even whatever I am standing today at my age. Agree? So now this 30, 40, 50, 60, whatever age I have already spent, and as my life is a sinusoidal, so if I look at the upside of this sinusoidal part, these are all my happy moment. I can say, like, could be a new job, could be a new house, could be a new car, could be a like, a new member in the family, marriage, whatever you can say. These are all expected things in our life. Even always we feel the happiness out of this. But when I look out the downside of this sinusoidal line again, that shows like kind of illness, kind of sadness, loss in family, loss in job, loss in money, whatever way. Now, why I told you it is up to you, and you have to protect. So the only thing is, When I'm in the upside of the sinusoidal, I I I I am happy. Everybody is happy, but can you protect that? Because and it is not a constant, as you know. Today, whatever I am earning, tomorrow may not be the same earning. Yesterday, what was my health condition? Tomorrow, it will not be my same health condition, right? And that is all about the life. Even it is unpredictable. Nobody knows even which part of country, which part of globe you are staying. Even irrespective of all the situation, we have seen even a lot of even situation past also. We have seen tsunami, we have seen corona, we have seen a lot of landslide, we have seen a lot of earthquake. All this incident we have seen apart from our individual any kind of accident or any kind of other even mishap, right? So now my question is, the upside of the thing, can you protect? The answer is no, because you don't know if it is happening, if it is coming, it is going, you are happy, but how long, you don't know. And for that one only, the downside nobody expect, but when the upside it is not there, and let's say this upside is automatically even it is not in my control, so the downside may happens even anytime. Now my question is, if I cannot protect my upside, or my let's say the upside of the sinusoidal, my happiness, then can I even take a control on my sadness? Can I even take a control on my loss of money? Can I even take a control even if somebody lost in family, or let's say he's the head of the family and he's the one and only even earning members in the family? Just imagine in that situation. So this straight line and whatever sinusoidal part, what I have told you, this is just to understand like a glimpse of the image of life, the importance of life, the protection of life. And typically that is only life insurance. So if I'm talking life insurance, even you know, life come first, the insurance come second. And insurance, as I told you, it is nothing but secure, ensure, assure and insure your life. That's it. Now, as I told you, there are three types of life insurance. So what is term insurance? Term insurance is a purely a protection plan. If I die, the kind of sum assured. Now what is sum assured? My life, there is a cost. I think already I have explained this in my human life value. You can go and you can see in details over there. So as a human, even I have a value. How can I denote this value? How can I define this value? So there is also a calculation that also been told in that video. So you can go back and you can see in my HLV human life value. So I'm not going to repeat once again. You can go and you can check it out. So let's say I have a value now, and how I can define my value? This is with my income of monthly. This is income with my yearly. Now XYZ amount, whatever it is coming, I must and should have that as my risk coverage. So let's say, I'll just give you an example. Let's say it is 1 crore. Is that 1 crore is enough for your life? How you will decide? That will be decided by your income of monthly or income of your yearly. So that part you can go and check it out in my human life value. There it is clearly, it is explained. Now this 1 crore, as I told you, let's say let's take an example of this 1 crore. And this 1 crore, let's say I am going to pay, let's say, for a certain period. There are different plans. There are 24 plus companies are there in this current IRDI guidelines, right? So there are different even plans offered by different companies. So I'm not getting into all those plans, all those products and all. I'm just giving you how the term insurance plan works. So now let's say this 1 crore is my sum assured. That means that sum is assured if I die even tomorrow itself. I'll repeat it once again. The meaning of sum assured, after I die, the company is going to pay me that assured amount. The sum, what I told you, this is 1 crore. So I am going to pay, let's say an example, let's say for this 1 crore, I'm not going to pay, let's say 1 crore. I'm going to pay a certain amount of money every year. It can be even monthly, it can be even quarterly, it can be even half yearly, it can be even yearly, one shot. How it will be calculated? any insurance plan, it will be calculated depends on two things. One, my age, right? Typical. And second, it is my gender. So if I'm a male, my premium will be little bit high. My mortality charges will be little bit high. So what is mortality charges? I'll tell you. Every insurance company, they have a calculation that out of 100, let's say this much will be the death ratio. I'm giving you an example, let's say 2%. So I know even out of 100, the 2% people will die, and for these 2% people, I need to pay whatever the sum assured it is been assured by the company. Am I clear? So with this ratio, there is a this rate been fixed. That mortality rate card is there for every company. There is also IRDA guidelines. Based on that one, they have to go. But it depends. Let's say, I'm just giving an example. Let's say it can be even 0.50 to till even 5 rupees also. Where my age is fitting, my gender is fitting. This is majorly two things. Even whatever the habits I have with my respective profession. This is the third category. And with these three things, my premium will be decided. So what is premium? I already told you, right? That the certain amount of money you have to pay to the company to continue and assure your 1 crore, let's say for a certain period. Now imagine this premium is coming for me, let's say at 10,000. I'm giving that example also. So what I told, that 10,000, let's say I'm going to pay, let's say for another 20 years, another 30 years, another 40 years, right? So here, let's say I'm giving an example, let's say for 30 years, I'm just going to pay that XYZ company. So 10,000 also, if I look out, so I'm not going to pay 1 crore, but what company is going to assure me, it is 1 crore. So let's say 3 lakhs I'm going to pay entire even my 30 years. But after paying even 10,000 also, even tomorrow also, if I die, that death should be a natural death. It should be even a fatal death. It cannot be a suicide death. Let me tell you that also. Just a understanding, just for your knowledge. Suicide cannot be considered as a death because it is my will and wish. But yes, I made an accident. I got even sudden heart attack, all this, that is considered in my fatal death, right? So how much I have paid? 10,000. And unfortunately, let's say tomorrow if I'm not there, what I'm going to get? 1 crore. Now let me tell you one simple thing. Whatever I told you so far, the straight line, the sinusoidal part, the upsend part, the downsend part, right? And whatever you have understood so far in this concept, now still people will be thinking, so if I don't die, then my 3 lakhs is gone. That's a typical thinking. That's what I told you. Can you control? Can you control your earn? Can you control your illness? Can you control your good part, or let's say whatever the saddest thing in your life? Can you control? The answer is no. Then how can you control your own exit of life? That is typically known as death. So that is also not in my control. So it is a protection tool, and term insurance is typically a protection insurance. If I die, this 1 crore, it will come to my family as a financial help. Because let's say whatever example I'm earning, if I'm not there, if the person is not there, so the earning also is going to be stopped. With that earning, my need also is going to be stopped, because my whatever my basic need, whatever my food, clothes and shelter, whatever it is, that is also going to be stopped, because money is the only one thing that even only you require even entire your life. You talk about any kind of commitment, you talk about any kind of luxury, you talk about any kind of your commitment, let's say marriage, education, whatever it is. So if I can protect this 1 crore, I cannot protect my life, I cannot protect my death, but yes, this 1 crore can protect my financial situation, which cannot be stable even after the person is not there, or let's say I'm not there. So that is all about my typical event term plan. If you have good If you don't have, you just take this protection. It is very, very important. I think corona we have seen a lot of incident, right? Now the second plan, or the second popular things what we see in insurance, that is called an endowment plan. It's called a traditional plan also. Now what is endowment plan, what is traditional plan? By name itself you can understand this product is this plan is all about a traditionally designed. That means this, under this plan I'll tell you the basic difference between term plan and this traditional plan on this endowment plan. In term plan, person only will receive if the death happens, or else there will be no money. That's what I have given the example. If somebody is paying, let's say 3 lakhs, if I'm not going to die between certain that period, I'm not going to get back anything. That's somebody's thought. I'm just, with that example, I'm just telling you. But you need to protect. That's what I told you, the example in term plan. But in endowment plan, even though I die or even though I don't die, the money will come back. I'll repeat it once again in one shot. Even though I die, even though I don't die, the money will come back at any cost. That means there are again endowment plan. It is with death also, even it is after death also. If I, let's say again same example I'll tell. Let's say I told you how to calculate your premium based on whatever parameter I just already discussed. So now let's say again same example. If I take, let's say for 30 years, 20 years, 10 years, whatever certain amount I'm going to pay, and let's say after this even I'm not going to die, I'm alive. So in term plan you will not get anything, but in endowment plan you will get the returns. How? For that there is again a different product being designed. Some product called par product, some product called non-par product. I'll just tell you in this video itself. So what is par, what is non-par? Par is nothing but the participant product. That means the XYZ fund, whatever company is collecting under this product, that money will be utilized, or it will be even divided even XYZ even parameter. The returns, whatever it is coming, based on that one, company also assured the returns between 4 to 8%, or let's say 6 to 10%, whatever the current parameter. If I look out, it is 4 to 8%. That means it is not assured that either you will get 4% or either you will get 8%. Not like you will get 4% only or you will get 8% only. It is either, because of my company performance. So for this I'll discuss you in the other video. I'm just telling you how the plan works, what exactly the basic understanding of life insurance. So insurance, as I told you, is a very vast. So that and all I'll discuss you later, right? So my par product gives me some result, gives me some returns, even though I don't die, even though it is age of 80, even though it is age of 90. So I'll come that also. So there are certain even company, they have even certain products also under this endowment plan, right? So we understood what is now par product. Now what is non-par? The name itself you can understand, which is non-participating. That means here the bonus is declared in the beginning with my previous performance. In par, what is happening? The money, whatever the company is collecting, they have their fund manager, they have their CFO, right? Based on that one, they are going to invest the certain parameters. Based on that one, the returns are going to be paid 4% or 8%. But in non-par, my past performance already, I know I'm giving 6%. I'm aware that my company is going to give you 7%. That will be assured. What is going to happen tomorrow, I don't know. It is my past performance, my company performance, and that is what we talk about IRDA top 10 companies, and we can understand that how this portfolio, how they are asset under management they are controlling. That and all we'll discuss later. I'm just giving a brief about your product and how life insurance works. So we are clear now what is par, what is non-par. In non-par it is assured, in par it is not assured. between that, I'll get my returns. Clear? Now there are certain companies, most of the companies, not certain companies, most of the companies, the endowment plan also they will give you even three plans. One is called money back. That typically you can understand under this plan, even you will get even certain amount of money. The intervals. Some companies will offer even some percentage even after 4 years, after 5 years, like this. Typically it's a money back plan. That means you will get a certain intervals, you will get your money back on your total sum assured, the percentage of that, which is definitely going to help you to fulfill your some of the commitments. Let's say I know even after 5 years I have a biggest commitment, and let's say if I know my sum assured is 1 crore and company is going to pay me even 20 lakhs, so definitely I know after 5 years I'm going to get this 20 lakhs. So work on that way. I'm just giving a thought. There is something called whole life plan. The name itself you can understand. This is a whole life plan. That means till my age of 99, that means 100 years. Whether I'm there or whether I'm not there. That's what I told you. I'm talking about endowment plan. So in this plan, what will happen? I will get my money if I'm alive, or else if I'm not alive, my nominee, who is my next, whom I am given the authority to receive this money after my death, that is typically called nominee. That person will receive with my sum assured, with the bonus amount, whatever it is, total fund, whatever it is there, that will be paid to the family. Clear? So money back is one very important things. Whole life plan is again a very important things. And typically again, if you look out, the endowment plan itself is designed. There are different plans, different even companies even offering even different endowment plan. Even as I told you, typically this endowment plan itself, it is going to give you the both. When I die, even I don't die. So if I don't die, I'll get a certain amount as per my par and non-par parameter. And if I die with my sum assured, whatever even my fund even till that date, that will be also given to the family. I hope now you are clear what exactly even term plan, what exactly even endowment plan, right? And how it works, and how I can also take an advantage. I can also plan of even according to that, right? Now the final thing on life insurance, it is called a plan called ULIP plan, ULIP, Unit Linked Insurance Plan. The name itself you can understand. There, whatever amount you are going to pay, the premium part already I said you, right? I'm just giving a brief of this. I'm not going to discuss like all the materialistic thing over here. So that will explain in some other video. So in ULIP plan, what is going to happen? Whatever again premium I pay actually, the certain amount of money it will go for my life coverage. As I told you, when it is a life insurance plan, it is a mortality, it is a coverage of life, coverage of risk. The another part, it will be invested typically on the equity market, and that again depends based on the fund, based on the fund manager. So they will also tell you this is the fund. They will all companies, wherever you are investing this money, you can ask them when this fund started, how this fund is giving returns. If you know it so well, if you don't know, you can ask that company, professionals, can you share me how this company is performing, so that you will have an idea like what exactly the returns you are going to be expected. Because there is no guarantee. There is no 4%, there is no 8%, there is not at all even any guarantee. It is all depends on the market performance and that fund performance, and that is typically called my unit linked insurance plan. How this unit also it will be decided, the certain amount whatever I'm going to pay whole amount to the company. The company fund manager, whatever the certain amount they are going to invest, that will be invested on your particular NAV rates itself on particular day. And based on that rate, whatever you have invested, equal that you will get the unit. So I'm just giving an example, though I have explained earlier, just in this video also, I'll just repeat it once again. So I'm investing, let's say, 1 lakh rupee per year. It can be even monthly, it can be even quarterly, 25,000, it can be even half yearly 50,000, whatever mode you want, you can do this. It is your choice. So let's say the whole year I'm going to pay, let's say 1 lakh, even one shot. And imagine that day, the NAV rate for that particular, let's say fund, let's say 10 rupees. So 1 lakh divided by 10 equal 10,000 units I'll be holding. Now based on that 10,000 unit, what will be the price tomorrow? If it is up, I'll get my fund up. If it is low, my fund will be low. And that is how the ULIP plan actually works. Clear? So we are clear about what is the basic of life insurance. We are also clear like what exactly the typically 3 plans even over there, how term plan works, how even typically traditional plan works, and how this endowment plan even works. Under even endowment plan, I just told you, there are a lot of even popular product called money back, called even whole life. All those plans also available with endowment plan itself. Right? Put together all, I'll just tell you currently, 80C is a tax benefit. The people are working. Whatever even you are investing towards the insurance plan, they can save up to 1.5 lakhs straight away under 80C. The returns are always free in life insurance. It is coming under section 1010D. But from this year, I'm talking about India, that this year, the premium, if it is more than 5 lakhs, my yearly premium, let's say if I'm paying 5 lakhs, the returns, whatever I'm going to get, that will not be free of cost now. It will be taxable even based on my, whatever even my tax slab, when I'll get the money returns. But below 5 lakhs, let's say if I'm investing 3 lakhs, even 4,99,000 also per year, whatever even I get a returns, even it is 100 crores, even it is 1,000 crores, that will be free under section 1010D. So these are the major tool for my tax saving also. And as I told you, the protection tool, how you are going to utilize this protection tool. And insurance, it's a must and should product, must and should protection for each and everyone, even though whatever your financial situation, whatever even commitment, whatever you are bachelor, you are married, you are let's say whatever your situation. This is just to educate to all that this is so and so important tool I should always must and have, because it is not a saving tool, it is not an investment tool, it is a protection tool. So how you want to take your protection, it is up to you. My job is here only to educate you with my experience. As I told you, I'm not here to promote any product, any of the plan. It is up to you how you are going to take your protection, right? So that's it from my end, and thanks for watching. If any questions, any doubt, any of your understanding is still pending, then please you can write to me, or you can put it in the chat box. You can also even get in touch with me, so that I'll take it forward. Right? Have a great time, and nice to meet you.